Citadel Securities bought the unit of Morgan Stanley that's focused on electronic market making for U.S. equity options. It's a move that further cements the firm's dominant role in popular derivatives, and that is today's focus on the Wall Street beat. We're going to dive into this now with Sridhar Natarajan of Bloomberg News, and it is amazing to see Morgan Stanley sell this business to Citadel Securities. Why would they? Because their rivalry is very, very fierce between Citadel Securities and the big banks. What does Morgan Stanley gain from handing it over to Ken Griffin?
Look, it's interesting that you take that perspective, because the question in my head was I couldn't believe Morgan Stanley was still in this business. And that was borne out in the story, because apparently Morgan Stanley was the last big bank still in the business of electronic market making of U.S. equity options. The thing you have to think about, and when you zoom out a little bit, is when you think about the equities business on Wall Street, with the big banks, it's intermediation and financing. Financing is the pocket that's been growing. Financing has been the pocket that's been lucrative when you leverage up your biggest clients so that they can make big bets in the market. Intermediation has not been seen as a high return business. It's more a good value proposition. It's something you need to have for your institutional clients to be a full service player. And when it comes to markets such as US equity options, especially where there's so much retail trading interest, that's built for speed and scale. That's built for players like Citadel Securities and others with specialized technologies. Banks like Morgan Stanley are not in a good position to compete. And once they're pulling out of that space, it's not a surprise that it's Citadel Securities that swoops in and takes those positions.
Sri, I'm comforted to hear you say that, because when I got the push alert on my phone yesterday, that was my reaction. I didn't know that Morgan Stanley was even in this business. And according to Bloomberg Intelligence, they only accounted for around 6% of such payments, which is also a little bit surprising. So now that we have the big banks fully out of this space, talk to us a little bit about the competitive landscape. Obviously, Citadel Securities is the big kahuna there, but what does the rest of the leaderboard look like? And
if you expand beyond just equities, fixed income, you look at players like Citadel Securities and the Jane Streets of the world, IMCs, they are making a bigger move into the traditional space of the big banks, and banks really don't have much of an option. These firms are not tied down by the same kind of regulatory constraints. They have invested a lot in their technology. They can do a lot more with a lot less. Look at the banking infrastructure, the number of people you have, the number of operations people you have to have, and then the regulation and compliance focused people you have. These competitors don't have those headaches.
I want to throw you a curveball, because next week is bank earnings. Goldman Sachs is expected to come out with the highest amount in equity trading revenue. Of course, obviously, we've been talking about Citadel Securities and the competitive nature of it, but there's also all this headline risk around Jane Street. How is the rat race shaping up this summer?
Well, the Jane Street headline risk, at least, it's not so much as to how it affects the rat race, but it is the gloating behind the scenes that you see, not just from the biggest banks, but also the other direct competitors to Jane Street. That's a problem they'll have to solve for. Again, we're talking about the options market. The fact that the options market in India accounts for 80% of the global volumes, that's just a crazy stat that a lot of people didn't appreciate, and it had become a lucrative space for a lot of players. Jane Street will have to figure out how to navigate it. The regulatory landscape in places like India isn't necessarily as predictable as what they're used to in India. And yes, it'll be a bit of a stumble, and the competitors will be happy for it for now. But I don't know if that necessarily changes in the long-term secular trend of where these players have been dominating and have been making inroads.